Hi, good afternoon. So I'm here today as the Connected Mobility Hub, although it puts Startup Labs Spain because we're collaborating together on an investor event that we're running. But I'm here generally as the Connected Mobility Hub because we're running an investor event during July and the 3rd of September. And we have pitching sessions on the 8th, the 15th, the 22nd, the 29th across multiple subverticals. And Kibo Ventures and Sonia Fernandez are one of the most active smart mobility investors in Southern Europe, I'd say, certainly in Spain. And so very kindly, she's come along to answer some questions. I've got some. If anybody else has any, please feel free to fire away. That's what we're here for. So Sonia, if you could sort of just talk us through who you are, Kibo, and then we'll move from there.
Well, thanks, Tom. Thanks for inviting me to this event. It's the first time I do one of these, so it's always a first. But no, I'm really happy to be here with you, and hopefully, people joining. So my background, born in Spain, Madrid. I started my career in investment banking, as you said, Lehman Brothers, right out of college. And I was there for 3 years in the mid-90s in London and New York. And in 97, I went to business school. Went to Stanford Business School, graduated in 99. And I think my professional career really changed after that experience. I came back to Spain, worked a little bit at a private equity firm called 3i, UK private equity firm. But very soon, I got an email from one of my classmates at Stanford saying that they had just started this startup called Mercado Libre, which at the time was kind of the Amazon of Latin America, the eBay, rather, of Latin America. And they wanted to open an office in Spain, and whether, I would know of anybody interested. And I said, yes, I am. I'm the person. So anyway, I joined the founding team of Mercado Libre. We're back in the end of 99. And that ended up being a very successful story. And it's one of the leading startups or digital companies in Latin America today. And after that, I did different things, but I spent almost 7 years as country manager for Match.com, as you said, so the online dating business. So I've always been doing digital businesses focused on the consumer side. After Match, I spent about 3 years in the ad tech space, so media and working for a US company that was doing behavioral targeting and innovative things at the time on advertising. And then I took a little bit of a time off or did a bit of consulting in between after my experience with the ad tech businesses. And I had met actually the two founders of Kibo. Kibo started in 2012. I joined Kibo in 2016. I had known Aquilino from my Match.com days because we had a partnership with them. He was at the time running one of the portals Eres Más wanted to in Spain. And I had known Javier Torremocha, who's the other founding partner of Kibo, because we worked together at Lehman way back in the mid-90s. So I was looking to do something different, and they were at the time raising their fund too. So it was kind of a very good match. I would bring my more of an operational experience to the team, and I joined with their second fund in 2016. So I moved to the other side.
To be honest with you. But that's not that different to mine. Actually, I've done ad tech, I've done B2C, etc., etc. So it's quite fun to me. I haven't got Stanford, unfortunately. I'd love that one. Well, we're the upper echelons. We can't all be there.
No.
But absolutely very interesting. Very interesting. It gives you a very broad perspective as well on sort of digital generally, I guess, because both from dating, from Mercado Libre, and obviously the ad tech are pretty advanced sectors, or were some of the most, still are the most advanced sectors in terms of digital generally. So
yeah, I think at the time, I felt like things came in waves. Like when we launched online auctions, there were a lot of companies doing the same thing, imitating the eBay model. And then obviously dating, there were a lot of dating apps at the time. So it was always, and ad tech, incredibly competitive. So it was always very competitive in industries where you were really competing against a lot of different companies trying to do the same thing, which made it interesting as well. Yeah.
Well, it is, and you, I don't know about the ad tech one, but if you had anything to do with it, you did both Match.com and Mercado Libre, a market leader. So you know, you can.
I don't think I had much to do with it, but
well, you can put some medals on your chest for that one, can't you? Yeah.
They did well.
So,
they did well.
I would.
Yeah.
Okay, so next one. So just jumping on to Kibo. So Kibo really does have a very interesting portfolio of smart mobility investments. And one question that came to me, and that's why I put it on the thing here, is that actually something on purpose? Is it a niche that you're specifically trying to focus on? Or is it just coincidence that there were some amazing opportunities that appeared?
Definitely. I think it started off as a coincidence, I would say. I mean, so just a few seconds on Kibo. I mean, we are a fund based in Madrid. We have offices in Madrid, Barcelona, and we have a venture partner also in Lisbon. And because we cover our geography, we didn't feel we could be a fund with a geography focus and also a vertical focus. So our investment thesis is to really try and find the best entrepreneurs in our region, regardless of the vertical. And having said that, I mean, we even though that's our region where we feel we can add most value because of our background and most of our network is here, we've also done investments outside of Spain and Portugal. And actually, one of our mobility investments is in Berlin Tier. So what started off as, you know, yes, we're finding that there are very good startups that are focused on mobility coming out of Spain. And obviously, you know, we invest in Series A rounds. So a little bit, the companies need to have proven that the business, you know, there's a good market fit already. And then we come in and we help them scale and help them, you know, build the KPI so that they can raise a successful B round. That's really where we see ourselves. And yeah, I mean, we saw that there were very interesting opportunities in the mobility space. And then I think what tends to happen for funds like ours is that once we invest in a particular area, then you become more knowledgeable, or then your network becomes, you know, the founder of the startup that you've invested in, you know, can recommend you to other founders in similar space. So that's how we get to the good deals as well. So it just built from that.
Okay. But yeah, that does often happen. That's even happened to us at the Connect to Mobility Hub. You know, I think we started off with 7 startups, and we're now on 146 or something within the association. Just one puts you in touch with another, and before you know it, there's a queue around the door, as it were, really.
I think sorry, just to add, I think it's also really interesting because the mobility space is quite diverse. So if you look at our portfolio in terms of mobility, what we call mobility companies, we have from deep tech companies and Gestos, which is a gesture recognition company. You may not think of it as mobility, but it has a lot of application in the automotive sector, to KDPOF, which has a terrible name, but it's a company that does plastic fiber optic for the connected car, to the Tier, which is the scooter business based out of Germany, which is much more consumer, or Bipi, which is the car subscription service. So in a way, and this doesn't take into account the logistics, we're also investors in Paack, which you can also, you know, bring into the mobility or flow of goods space. So it's just a lot of different. It's a very broad sector. It's ranging from technology to the connected car, to the consumer, to the flow of goods, smart cities as well. It's just a very broad space.
I'd even add to that list. I know you've had an exit, but I'd even add to that list SinDelantal, because food delivery is extremely important. I mean, in the pandemic, it has been essential. And even Carto. I know it's not specifically mobility in any way, shape, or form, but really, I mean, the use that you can give to it is very related.
It's definitely very broad, which also for a fund like ours, it allows us to, look at a lot of different startups that are attacking mobility in different ways. So it makes sense for us to have this as a sector of focus.
I mean, within the talking about the investor event that we're doing. So we're doing these pitches every day. We sort of split it into different sub verticals for that very reason. So we have electric mobility, logistics, sustainable mobility, shared mobility, smart cities, as well. And then, to be honest with you, there's even a sort of another sector, drones. They don't really fit into any of those sub verticals, but they are they're in everything, right? They're in logistics, they're in sustainable mobility, etc., etc. So it is really broad, and I think we're making it broader every day almost. We're very complicated creatures, aren't we? We live in very complicated environments, and I think we're making it broader as time goes on. Okay. So next question, going on to COVID-19, because we're here and everybody's always interested to know how people have reacted so that they can learn from that. In what way have those, specifically, I mean, we don't just have to talk about the smart mobility ones because it's affected all companies in similar ways, but trying to focus on the smart mobility companies within your portfolio, how have they been hit by COVID-19 and how have they responded?
So I think initially we were quite worried, and especially with lockdown. And if you think about mobility and lockdown, there's going to be
great for Tier, has it?
Right? You can't move, so mobility is going to be impacted. But actually, I think we have companies like Bipi, and we have companies like Tier that definitely in the smart mobility sector, and companies like Tier have actually, I think they're going to come out ahead in terms of the competitive landscape. And I think in this tough situations, I think the strongest teams have really a lot of value. And I think also something which we might not have thought about initially, also the country where they're based has also proven to be extremely important. In the case of Tier being based in Germany, Germany has very favorable furlough laws for employees, so they haven't really had to fire anybody. Whereas you have in the case of the U.S. companies, Bird, everybody knows, how they, had the Zoom firing of a lot of their employees. So I don't know. I think it's some of the economic conditions of the countries where these companies are based has proven to be an asset. In the case of Tier, definitely. And then one of the things that we've seen in these companies is that they have reacted extremely fast. So they were already putting up contingency plans in place, how they were going to deal with employees, cut costs, and they have been really very fast implementing a lot of good measures that I think in the end, the ones that were able to do that and had enough cash already raised to be able to weather the storm, I think in the end they will come out ahead. And also, to be honest, Tom, I think it's also a question of timing. If COVID March hit you with money in the bank because you had just raised a round, then good for you. Yeah. If you were in the middle of a fundraise, then so sometimes, to be honest, it's a little bit of the quality of the team, like not panicking and doing the right thing, but also luck in terms of timing. And also, to be honest, I think some of these businesses are going to come out stronger. In the case of Paack, it's also one of our portfolio companies, logistics, they're booming. I mean, they're doing incredibly well just because, you have a lot more e-commerce going on and delivery. So that has been really, as with other sectors like, edtech, it's been a real something that has favored them. And I think in a way, the companies that are more digital, that have done their homework and have understood the market and have had enough money raised so far, I think now metrics are starting to show that the worst is over, and they're coming out in pretty good shape.
Yeah, just going on to because the tier with Germany is a really interesting example, actually, because I saw yesterday, I can't remember what he's called, but the chief medical advisor to Merkel was saying that one of the problems they have in Germany is because they dealt so well, not now with furlough, specifically with COVID-19, in terms of stopping the spread of the disease. So many people feel that there isn't a problem, and so they're pretty convinced that there's going to be an increase again, and who knows what will happen. Have you seen anything of that? I mean, that must have affected in a big way as well, because obviously Bipi is only Spain at the moment.
Bipi is only Spain at the moment. We're launching in France. And the thing with Bipi, I think we're very bullish with Bipi. Funny enough, number of subscriptions have continued to raise. I mean, there was a time where we were extending subscriptions, but I think there's definitely going to be a crunch on access to consumer credit in Spain. I think people able to buy a car, the number of people who will be able to buy a car is going to reduce, but people will need to still own a car. And I think, if anything, public transportation is probably going to come down, or at least in the foreseeable near term. So people will want to drive, and the subscription model, to have that flexibility and to be able to, I don't have the money for a down payment for a car, but I can actually get access to a car, I think is going to prove that it's a very valid business model, even more valid than it was before, just because it's an alternative to not being able to access a car at all. Versus
I agree.
Yeah.
The uncertainty. I think uncertainty is one of the reasons people would be interested in that kind of model. There was already uncertainty with, do I buy a diesel? Do I buy an electric? What's going to happen with laws? Well, the current situation hasn't made the world and the future less certain, has it? More certain. It's made it a lot less certain.
No, not at all. Yeah, and we're seeing in terms of monthly subscriptions, we're seeing an increase in Bipi, which is really encouraging. I think one of the things that we want to do with Bipi is to start advertising, doing mass marketing, which in a way I think it's also a category that is not as well known for the mass market. So we have some media plans in the works, which we believe are going to be, very positive to, just get more awareness on these types of services.
Yeah, that makes sense. But what I was going to ask, and that's why I said the Bipi thing, and if it was just Spain, is you've noticed the not just the geographies from a legal perspective, if you've really noticed a big difference in the market growth and the level of optimism, I guess, in a large way affects consumer spending. If you've noticed a big effect, I know you said Bipi's continued, but that's partially because of its model as well, isn't it? Because if you
because of the model. Yeah, I don't know. I mean, with Tier being more broadly, they're present in
multiple countries.
60 cities already. I think their model has worked better, I think, in higher purchasing power countries. I think it's still relatively expensive to rent a scooter in Spain or Portugal versus the Nordic countries. And even though probably Tier thought way when we invested in October 2018 that Spain, actually, it was their second market where they launched, was going to be very big. It ended up not being the case. I think also not only because of the price, I think it's just regulation has played a very big role, and there's just no from a legal perspective, every city works differently. Germany has the same law for all the micromobility companies across the country, so that makes a big difference. Some of the RFPs to get licenses in Madrid were really very complicated, and just even to a point where it was a little bit loss-making, since you had to have bikes in every single part of the city, and sometimes you didn't have enough density in terms of a number of scooters that it made sense for you to have that. Anyway, I think regulation has played a part, but I think also in terms of, it's early days. I mean, we'll have to see how the economic recession, the aftermath of COVID, will impact the different markets. I imagine Southern Europe will be more harshly affected because of tourism and the bigger weight of GDP that that sector has, and obviously that's going to be very tough, and maybe the rest of the European markets are going to come out faster of the recession. So yeah, I think sometimes we like to think at Kibo that we have, because we're not, we don't focus on a particular vertical. We're quite diversified, and from a risk perspective, that's been a positive thing for our fund. And in terms of geography, maybe if you have startups based in different countries, that can also be a good way to leverage or balance the risk. Well,
that's what I was thinking, really. I mean, okay, these things, hopefully they're once in a lifetime and they're temporary and all the rest of it. But who knows what the future will bring in generally. I mean, and that brings me to my next question, which was, how do you see the current investment situation for smart mobility companies, or generally for startups? Uncertainty makes people unwilling to make decisions. It also makes cash more valuable than it perhaps was before. But on the other hand, I guess if everything's uncertain, if you're a shareholder in a shale gas company and suddenly it's costing you money to take it out of the ground, then maybe an investment in a startup isn't quite as comparatively risky as it was previously. So how do you see that?
Yeah, I mean, we have. I mean, obviously with being confined, we haven't been able to have so many face-to-face meetings with founders, but definitely funds are active. Funds that have raised, they have money to deploy, and I think if anything, probably one of the impacts, one of the side effects is going to be valuations. So I think investors will look more closely at the runway of cash, and the path to profitability needs to probably be there sooner than before, because you need to be able to make sure that what you're funding will get the company to at a point where hopefully it won't even need funding. I mean, it depends on what type of business you're funding, but yeah. Ideally you want to have more I guess you want to get more out of your money in terms of what that's going to buy for the company. But I think that the good deals will still be very competitive. I think sectors, if we think about companies like Paack, they didn't plan to raise more money, and they're getting even growth funds coming to them because they're seeing the metrics. So for the companies that are doing really well, I think it will accelerate their opportunities to get funded. And for the ones that are, maybe for more traditional SaaS companies, that's a little bit more question mark, because some of the bigger deals may take more time to materialize. But for some of the other companies where it's more consumer based and it's clear that the KPIs are and their metrics are doing well, I think those deals will generate interest. And yeah, maybe evaluations will be more relatively lower. But I don't know. That's still I don't know. That's what the consensus, or if you read the Medium posts of the really gurus in this space that would say, but I don't know. I think we will still, the jury's out. If the deal is competitive, I'm not sure that valuations will necessarily drop.
Well, and those valuations that do drop are probably those that should have dropped in the first place. You know, there was maybe a little bit of a bubble forming that's been, you know, I'm thinking specifically of the sort of the Spanish market that's maybe been, it wasn't too large, but maybe it's been predictable.
And one of the things, just to add, one of the things that we saw initially was for the companies, and we have a couple of cases in our portfolio of companies that were looking to close rounds around March, that, you know, the companies, the funds, and some corporate funds, more actually, I'm thinking of one example, they totally pulled out. They said, no, we just can't. We have our, our shareholders will not see this with good eyes, but actually now they're coming back. So I think it hasn't been that long. So if you think about March, we're, end of June, and they're already seeing, well, this is it. We've been able to digest the impact on the corporate side, and they're, at least from our side, we have a couple of cases where they're re-engaging in those conversations again. So that's good.
That's good news. Yeah, because lots of people said the same thing about CVCs, were sort of, they were the first ones to pull out and said, look, we're not gonna invest at the moment. So it's good to hear that that's changing. Okay, fantastic. Next one. So, what would you suggest to startups raising rounds to speed up the process? That's always the number one question. Oh, we want to close our round now. Where's our lead investor? Where's our term sheet? Where's the others that are following on? So what would you suggest at the moment? I guess it's probably not going to be different advice than you would have given 6 months ago. But what would your advice be in the current situation to speed up the process?
Yeah, I think it's always, CEOs and founders always say, we're always fundraising, right? Even if they just close the round. So our advice is to really be in touch with your potential investors. Keep them up to date. A lot of times, even with the companies that may be too early for us to invest, we come in at Series A. So maybe these are startups that are a little bit below our radar in terms of stage. We encourage them to keep us posted. And some of the better companies, they have a newsletter that they send to investors. And, I don't mind receiving updates of companies. And the fact that, if you have a company that said, we'll do X, and then they actually do deliver on X, and you're able to track them over time, then I think it's much more likely that you will end up investing when the time comes. And I think also one of the things that we've found also is that even some of the so-called more B round investors, so coming in at a later stage, we're all, even as we come in at Series A and we look at seed investments just because we want to keep our pipeline, full, is the same with the as you move up the chain. So I think it's very interesting for the companies that we fund that they already engage with who they think will be their next investor early on, and keep them up to date on their KPIs and how they're doing. I don't know. I think keeping a good line of conversation, because if the company has never reached out to you and suddenly they want to close a round and you feel that they've come out of nowhere, it's going to take time for you to feel comfortable. And especially at our level, Series A, but Series B investors, they haven't heard of the company. That's probably more unusual, because you would think that company already has investors in the cap table that would be facilitating those intros. So part of our role at Kibo, which we think we have a good track record, is to put those companies in touch with who we believe will be the investors that will be interested in coming, to the B rounds. And you need to do that in a careful way, because you don't want to be seen as the investor who sends anything out. You want to make sure that the partner who would be following that particular sector. You want to make sure that that's something that would be relevant for them. You don't want to waste people's time. But at the same time, once you establish that credibility of, being a good source of deal flow to the other funds, I think that's good for, and we invest a lot of time having those conversations with investors. And this is an industry, I don't know, maybe people don't think about it in that way, but it's very collaborative. I mean, we have regular, I don't know, maybe monthly or bi-monthly calls with investors from, like even competitors, you would think, that do the same things as we do in Europe, and we exchange deal flow, because you never know. And we co-invest all the time. So we may have a deal where, the company is raising a round, we can't cover the whole round, but we want to co-invest with an investor. So it's much more friendly in that way than what people would think.
Would expect.
Yeah, sometimes, if there's only room for one investor, then we would fight to get the deal, right? But it doesn't need to be that way.
And I think that's very important, as you say, as you go on the rounds, right? Because the sort of the radius of activity grows. So a SoftBank looks at the entire world, a vision fund looks at the entire world, whereas a Kibo is maybe looking predominantly at Spain. So or an Atomico is looking at Europe, and you sort of go up the chain, as it were, in a way, and that's very difficult for a startup to do by themselves.
And also, you find that some of these bigger funds that will tend to lead the 20+ million rounds, they don't tend to have people on the ground in Spain, which is they probably now probably most of the big ones have already made some investments in Spain. So they do have, and that is really great, because it's not like that they wouldn't consider investing in Spanish startup. They realize that there are good businesses that can come out of this region, but they don't really have the resources to cover the market fully. Maybe they have one person sitting in London that has the mandate to cover, and maybe that person will come for the conferences. But so our role is to be in touch with that assigned person to cover Spain, and really work as a partner, because at the end of the day, it's also in our interest to, maybe we compete in some rounds, but in some other rounds, we will need to get them interested in our portfolio company. So that's good. So in a way, we're not in London where they would have their whole teams exploring the deal flow themselves, and we have a role to play, being the local investor in the ground.
No, I think that makes a lot of sense, and I think it makes it adds a lot of value to the startups, and it's not something that they often consider. One of the when somebody's willing to write a check in terms of investment, often people just jump at it and go, okay, they take the money from the first person, and they don't perhaps ask the questions they should ask, in terms of how far is this company, how far is this investor going to take me? And often that value isn't financial. It's the supporting role that adds more value to the shareholder value. So obviously to the founders predominantly than the finances themselves.
We think so, and sometimes it's like a double-edged sword in a way, because we feel some founders would rather have the international name on their cap table early on, and they feel that's a big win. But it's a very long race. Even if you've raised a successful Series A, that doesn't mean you will raise the Series B. And I think also, in some cases, I wouldn't say it's like a generalization, but in some cases, for some of the international investors, if you have the guy will need to fly, from the US to your board in Spain, it's just, I don't know. I think there is some value in being close and being able to just go to your investor's office, have a debrief, and the airtime and the attention that you will get, I think still is, it's just higher. Just because you're closer to the startups, and maybe that's the value we bring. I mean, in the end, sometimes bigger funds have I mean, this is a business where you need a fund returner, but we're also very conscious, being a local fund, that the likelihood that we will have, a dragon, one company that will make, is just a bit less likely in our markets. So we need to be able to make sure we keep our portfolio balanced, and we devote the right amount of time to each of them. I think some of the bigger funds, if the company is not going to make it, they will write it off quite early on in the process. I think we oftentimes write it out a little bit longer, make sure that we can make sure we can save the company if we can.
Yeah, of course. And what you were talking about with funds keeping startups on the radar, that just to give a little example of what I've seen right now with the investor event, that I was in contact with a very large mobility focused, transportation focused fund, huge. I mean, their minimum ticket was 5 million, the initial ticket, it went up to 20 million, and their capacity of follow-on was like 100 million or something. And I said to them, look, the ticket sizes that you're going to see, or the total sizes that you're going to see, round sizes in the startups here, go from 100, I think the smallest 100,000 and the largest is 3 million. So I go, we don't even hit your minimum ticket size, and they were still very interested on coming aboard. So look, it gives us a view of what people are doing, and we can keep them on the radar. As you say, if we see that they're, you take the deck, you look at it, you see their promises, and you see that they actually fulfilled them in 6 months, a year's time, well, it gives you a lot more trust in that they will fulfill the promises that they're then giving you in a year's time, because they did it, looking back at history, they did it in previous rounds.
No, definitely. I think also in terms of valuation, and I think we have a good thing going for us in terms of where we are based in our region, in terms of capital efficiency. We can really, a company raising a 2 million round, say, they can really build a very strong product. They can really go a long way with that 2 million versus a company that is based in, obviously, the US or somewhere else in Europe. Access to talent is incredible. We have great engineers. I don't think that in terms of the product development, we have anything to, any difficulty because we're based here. On the contrary, we have probably also very skilled people that are quite loyal to the company if they feel that it's a worthwhile project to be involved in. So I think that's good also, because in terms of value creation, I think once we can fund companies at the Series A level, and then the valuations in Spain, relatively, those comparable companies in other markets would reach higher valuations. But when these companies come to the B rounds, then they are already competing with, a bigger fund will be looking at the company in Spain versus, the comparable company in France or Germany. And then those valuations tend to match, so that there's a good gap there. And obviously, investors, there's a reason why investors are coming a little bit lower in the rounds, because they see that there's a valuation gap that can be obtained. It's interesting.
No, the reason, well, exactly. Do you know what? The reason I'm smiling is because I say exactly the same between Andalusia and the rest of Spain.
Yeah.
I say in Andalusia, as business angels, we invest in very early stages. I think the earliest has been an Excel sheet was presented to me. There wasn't even a presentation. And at that stage, because there's less, there's also a limited supply of decent startups, but because there's very much lower demand, the price is below average. As when you reach Series A, the price then starts reaching the average price. So your return, if the company reaches that later stage, is much greater than it would be if it started the average price and it went on to average price.
Yeah, but so you're applying the same logic at a earlier stage. So
exactly the same logic, and between one region to the rest of the time. That's why I loved it. You're the first person that I've heard say the same thing that I say all the time. So I thought that was actually
it is true. And actually, to be honest, I think it's going to be, it's better for startups raising money right now because it's more competitive from the investor's point of view. I mean, you would have, I was saying now before that you may have the person in London covering Spain, but actually, I mean, and we see it all the time because we have conversations with funds based out of Germany, of the UK, France, covering Spain, and the people covering Spain, they're super knowledgeable about. I mean, it's not like we're, you know, sharing deal flow and they're discovering new companies. I mean, they have, they're very up to speed on everything that's going on. So I think, you know, for founders, they have more funds to choose from, which, you know, in the end, I think it's it will make life harder for funds to differentiate ourselves because you know, I can say, look, we're local, we're going to be close to you, but you know, maybe the international fund is going to say yes, but you know, I'm 2-hour plane flight from you, and I've invested in this, and I know very well the category. So I mean, each of us has, you know, their different angles, but the reality is this is more to choose from, which is good, I think.
But I think it's good because, you know, at the end of the day, competition improves the market, and if the market improves, then, you know, rising tide raises all boats.
Yeah.
There will be some that sink or that don't rise, you know, or that aren't able to compete in the long run. But it must be good that if funds start giving more support to their startups, to the valuations of those startups, and the evolution of those startups improves or grows, or they grow faster, or they operate more efficiently, or they're more capital efficient, or whatever it be, then that can only help the ecosystem. And if the ecosystems help, then, you know, there's a beneficial effect for beneficial circle for everybody.
Yeah, absolutely. And I think also in a way, one of the things that, you know, we at Kibo think about is how do we differentiate ourselves as well, and how can we provide value to our portfolio companies. And I think, you know, I think the industry is just getting more mature. So it's, you know, more opportunities for CEOs and founders to you know, to find a way to share experiences, to learn from each other, to have even coaching sessions. I mean, there's a lot more value that I think the founder can get in terms of also accessing other founders. And I think in many ways, because we're stage, you know, we invest at the same stage, even though the companies may be different, the level of issues that they have to deal with are relatively similar in many ways. You know, scale, dealing with, you know, growth, how to scale sales organizations, and we can really play a role in getting those learnings or best practices shared between them. So I think that's also good when you think about, you know, I want to be in a fund where, you know, it has good companies under their portfolio that I can also learn from. So
no, and definitely to those startups that are either watching this or that see this, I out of the funds, you know, you're definitely in the top, in my esteem at least, and I see quite a few of them. So definitely, we've got a question here from Ashutosh. But I don't really know how to answer it. I don't know if you've seen it. He's sort of done it between two things. He said, "How can they get sponsorship?" And then he goes, "How long will the economic crisis persist?" Difficult one to answer because I don't know. I can leave it to you, or I can make a stab at it as well.
Yeah, go ahead.
Well, okay. I think in terms of students, given the focus that we've got at the moment on investment, from a business angels, so a 3F perspective, I would say that if you present an interesting idea with a multidisciplinary team, and those are really two of the key factors, and you're not too complicated on valuations, because that often is, if when you speak between business angels, the number one thing that stops deals going through, investment deals, tends to be valuation at an early stage, then you've got a very high probability of raising funds at a very seed level. In fact, I've had, I don't know, for the last 3 weeks, I've had maybe 10 people contact me that are interested in becoming business angels. So I would imagine, and in different countries. So I think there's a bit of a trend there. As I say, because there's uncertainty in all types of investment, I think people are now saying, look, you know, let's take a sort of casino philosophy on business angel investment, and as long as we're prepared to lose it, we want to help out anyway. And if we win, well, you know, we win, but at least we're going to enjoy ourselves whilst we're doing it. And then the next one that the same guys asked, I'll leave to you, which was, how long do you think recovery will take?
Yeah, look, I don't have the crystal ball at all. I mean, I feel I'm part of the wheel that goes round here as everybody else. But from what we're seeing, at least with the appetite for, as I was saying before, some of the companies that had their funding stopped and now they're re-engaging back in the conversations, I think it's probably going to be less than we think, unless obviously, something happens during autumn time and in the fall and we have to go back to our homes again, which we hope that doesn't happen. But I don't know, obviously there will be some industries that will be hit harder. I was reading just today, I don't know how I landed to this article on Airbnb, how they almost lost everything after 12 years building it. It was an article by the CEO. But even the end of the article is like, look, well, maybe people will travel less, but they will definitely want to get out of the house and rent other places and maybe move locally. So even in the markets where you would expect the harshest impacts, they're already seeing some light. So I think hopefully, markets will get used to, there will be some new measures that people will need to just take as part of their daily routine, as we all are getting are adjusting to. But hopefully it will mean that, we'll get back to business as usual. Probably, I don't know, in terms of, we'll do more of this live, online events versus, getting to, on conferences in real life. Maybe that could be one thing that I can foresee that will be in that won't happen in the near future. But most of the rest of the activities, I hope at least that it won't be too long before we go back to some normality. Yeah. And I don't know, Tom, what do you think? Do you have?
Well, no,
my insights are as good as anybody's.
I'd just add something. I'd add something to that. Well, I'd add two things. One is just a little feedback on. So on our portfolio, we've got about 50 companies in portfolio. And at the beginning of the crisis, I did a sort of analysis of how risky I thought they would be, and I think I put down about 8. I can't remember the exact figure, but it was about 8 of the 50 that I went, oof, I'm not sure what's going to happen. And all of them have been okay. So to date, they've pivoted, they've cut costs, they've done what they've needed to do to survive in the situation. And some of them, as you say, I mean, you talk about Paack, my star's Mox, so it's a similar last mile logistics business. And again, they've their first week 70% drop in demand, and now they're stronger than they were previously. So I think the startups generally have, in this respect, a big advantage, because in uncertain times you need to be very agile, and startups by definition are very agile. And on the top of that, if the boat's leaking or if you're bleeding, you've got to keep your bleeding to a minimum. Startups also tend to be very capital efficient, so they have two huge advantages compared to other companies, and I think that's showing in I mean, you've said a similar thing. You said that they seem to be getting through. Airbnb even, they'll find a way through, and maybe it won't be as the future, or the medium-term future won't be quite as bright, but in the long term it's possibly even brighter, I'd say. I think governments are seeing it, corporates are seeing it, corporations are seeing it, everybody's seeing that this is, innovation is the key, and the main innovators tend to be small, agile, digital companies, which, is the definition of a startup, and it's scalable.
No, absolutely. I just wanted to say I belong to part of a group called Level 20, which is it's a European group. It's a women group that aims to have 20% of women in decision-making positions at funds, but it includes venture funds, but also private equity. It's actually the founders come from the private equity, so it's more private equity, and then venture capital comes in there. But we've had, during this past few months, we've had conversations. I'm heading the chapter for the VC in Spain, and the president comes from the private equity sector, and the private equity funds have been hit, I think, much harder, because they have a lot of their businesses are, just bigger, more industrial, and the fact that we have made investments in digital assets, in the end, I think, you can have some cases where, this is going to hit them so hard but we're not seeing it, and we are quite. I think it's a very good hedge. We've always said it in our, because we as a fund, we also need to, we're a startup as well. We see ourselves as a startup, and we raise money, and we need to raise funds to be able to invest. So we need to convince investors to invest in our asset class, the venture capital asset class. And we think we are a hedge in some of the downsides of the economic market. And in this case, I think we're better off than the traditional private equity funds, more brick and mortar businesses, just by the definition of the type of assets that we invest in, the likelihood that they're able to, as you say, pivot or, weather the storm, or think about other business models, and to be honest, some of the winners in this crisis have been the digital businesses. Think about Zoom, or think about, a lot of the edtech platforms, health tech. Yeah. So, well, I think we're not in a bad place to be, even though, we have the challenges that we do, because we invest in high-risk businesses, and most of the businesses that we invest in, by definition won't, be successful. But on the average, I think we invest in businesses that are better equipped to, do well under these scenarios.
Yeah, I agree completely, and I think for me, startup investing also has a socioeconomic impact in terms of you're supporting, I can't remember where I've seen it, but I know that not only is the majority of employment created by small companies, it's created by growing companies. So if you take small growing companies, which again is in effect the definition of a startup, or at least one that's going well, then that's the future of employment, or at least it's one of the futures of employment. It's one way to create more employment, is to invest in this type of thing, create more wealth, solve more problems, et cetera, et cetera.
Yeah, no, absolutely. We're totally convinced, and we hope the government sees it under the same light. I think to some extent they are. I think, unfortunately, we're not at the top of the league in terms of companies that favor entrepreneurship. As I think we have a few lessons to learn from some of the other European markets. But it's also our job, from organizations such as ASCRI and others to really push and get the message, and really be proactive in terms of concrete action items that the government can do to encourage investment and get the right incentives in place.
Well, yeah, and I think I mean, it's one of the things I did this series of at the very beginning. I did this series of sort of different sectors, how I felt they were going to be impacted by COVID-19. I'd like to go back and have a look at it actually, see how well, maybe in a couple of months' time, see how well I did. But one of the things that seemed clear, and it seems clearer really on a day-by-day basis, is that a lot of the support ends up going to larger companies. You know, if you look at what's going on with Air France, KLM, et cetera, you know, they're being given thousands, hundreds of thousands of, thousands of millions of euros, I mean, billions of euros to support themselves. And, you know, that amount of money, if it were distributed to the startup sector generally, might well have a more positive impact on society. I would say undoubtedly would have a more positive impact on society, but you know, there's always nothing's ever sure in this life. But you know, and yet it's going to larger companies. Europcar the same. You look at Bipi. You talk about Bipi. Well, how much was spent on supporting Europcar? It's like 500 million euros or something. You know, imagine Bipi with 500 million euros. I think you would find that they did. Yeah, they'd have a very positive impact on society. Anyway, just we'll jump back to where we were. We'll go off the philosophical side. And just, you know, we've only got a few minutes left. So what sub-verticals of smart mobility do you currently find of most interest? Which do you feel, I'll do two more questions and that's it. So this one.
Yeah, I mean, it depends how you define smart mobility, right? But I mean, we find there's a lot of companies in the around the electric vehicle that I think is going to be very interesting to see how that progresses, and all the charging and all of that angle and Internet of Things related to that. I think is going to be interesting. Also, the data transfer and the amount of information that the car needs to have, and how the use of that data. I think that's also very very relevant. Obviously, we have the theme of driverless cars, and I don't know, that is still some way to go. I think in terms of mobility per se, I think it's going to be a very interesting multimodal approach to companies that are doing, you know, the e-scooter, but then they're doing the bikes, and then they may do, and even if you think about Tier, we don't think about them, and they don't think themselves as an e-scooter company. They think of them as a very, you know, a company that wants to change mobility for good, and mobility in many different ways. So I don't know. We see a lot of different angles on the data side, on the safety for the car as well. A lot of companies that are looking at how you can monitor what's going on inside the car. I think that's going to be quite relevant, you know, as we enter into more of a semi, you know, driverless or autonomous driving. So yeah, and if you include in smart mobility, if you think about the logistics side, I don't know if you take that under your definition, then there's definitely a lot of companies that are going to be very relevant in terms of how to deal with last mile delivery. You talked about before in terms of drones. How do we get, obviously the surge of e-commerce is unstoppable. How do we get those, how do we get efficiency in how we get those packages to the end customer? You know, we've seen in the case of Paack, a lot of their success has been because they can do scheduled delivery, and that's something that's what people want. But, you know, how do you get efficiency there? Do you need to have, you know, delivery centers inside the cities to be able to do that? You know, the way transportation is going to change, you know, what's going to happen to the parking spaces. There's just a lot of also around city and city management and real estate. I don't know. I mean, it's fascinating because you can really see a lot of companies that can optimize how things are currently done, and also will come up with different ways to do things and do it in a more environmentally friendly way, which is also very interesting for the cities to support those initiatives.
Certainly post-COVID, because I think everybody noticed how clean the air was in cities, and I don't think people really, when they think about it, they don't want to go back. I mean, we're starting to go back, and people easily forget. But there's got to be a huge amount of public investment, and it makes sense that public investment be on something that will help future generations at the end of the day.
And electrification is going to be also very relevant. I think that's going to be something in the agenda for every government, and how that shapes in terms of startups that cater for that need. That's going to be and it's consumer mobility and also flow of goods. So it's both, both playing to have a role to play.
Well, even Amazon with their investment the other day, they're talking about that investment not for who knows, right? But one of the reasons they'll be interested in autonomous vehicles is because of the
delivery
logistics of their
logistics.
Here's a quick question from Nacho. So I was gonna call it and then with my last one. I've still got one for you myself. But if you could just, you did talk a little bit right now about mass. But if you could just answer his question, that'd be great.
Yeah, I think there's definitely a big shift, from owning to having access to, and I think that's obviously here to stay. And if anything, is going to increase even more. When we looked at the Bipi investment, I think one of the data points that we looked at is what was the young people with their first paycheck, what was the thing that they wanted to have? And it used to be a few years ago, it was like, they would just buy a car. And now it's like, in the list is not even, I don't know, I'm making this up because I can't remember, but it wasn't even in the top 3 at all. So it's definitely, and now you go to Berlin and no one owns a car. It's just but you have a lot of different ways to address mobility. So it's a service. You want to go from A to B, and you can have a different, even if for the micro mobility, you have a different asset, a different gadget for the different distance that you want to cover. So it's going to be very interesting how you cater for those needs, but it will imply a lack of ownership of the asset, which is a radical change of the business model. So,
And just a question then, because one of the trends that at least I assume might happen as a result of COVID is that you're going to get potentially less people commuting for starters, because there's more remote work, but also more people sort of moving outside of the peripheries of cities. So I think this was a trend that sort of long term is going to happen anyway, that the centers of cities are great because you get around by walking. When there are autonomous vehicles, you can move about very easily anyway, and that the sort of the suburbs, the very close to the center of the suburbs, will sort of empty out a little bit, and then the further away suburbs will grow slightly relative to the rest. How does that affect mobility as a service? Because it will have an effect. I mean, I guess it means that rather than just taking, your scooter, maybe you're taking multiple types of vehicle, right? You're taking a car to get in, or your autonomous shuttle or whatever to get into the city area, and then maybe you're taking a bicycle or your scooter, and then you're walking the last 100 meters. But how do you see that sort of trend affecting mass? I guess it makes it far more valuable as a proposition. No?
Absolutely, and I think platforms that are able to put it all together. Even we've been looking at a startup, very interesting startup out of Portugal, that is also looking at a platform for public transportation. But I think to be able to unify that offering, I think it's going to be even more relevant, because you will use a different type of transport based on, maybe you have a car that takes you to the station, then maybe you have a a train that gets you to some part of the city, and then you have your micromobility, either a scooter or an e-bike that you take. So, and that's why I think some of the bigger companies, or I was talking about Tier, but it's in the strategy of companies that have already raised a considerable amount of money in different rounds, that they want to offer a wide variety of options for the consumer, because it's not the multimodal, what you consume at each point in time may be different, but you will have different needs, or maybe within your household there will be different needs. One of the use cases that we saw, interesting enough, for Bipi was a second car. I don't want to buy a second car, but my son or my daughter need to go to university and they need to drive, so how do you do that? But they don't need to drive, it's not 12 months, maybe it's only from October to June or May, and that's a very good option. So yeah, we'll see different needs, and there will be solutions that cater to those.
It's interesting that you said the train one, because tomorrow I have one of these sessions with Boyd Cohen from IOMOB, and they're the ones that have done the Renfe mobility as a service, or multimodal app. So let's see what he says tomorrow. Well, listen, Sonia, thank you very much. I'm going to take that as my last question, because we've gone over an hour now. Thank you very much for your time.
You're welcome.
I'd have liked more questions, but I guess that's always the case. I gave you enough of them. Thank you very much. I hope that you've enjoyed it. I will send you the link when I upload it, when I share it from YouTube and whatever. And we'll see you soon. Hopefully we'll see you on the 8th for our logistics pitching sessions. I don't think you signed up yet. So you need to.
No, but now I have to. There's no way.
You can't escape now, can you?
Thanks for reminding me. Sometimes, with all this, online events, it's difficult to keep track, but I'll definitely sign up for it. Brilliant. Thanks a lot, Tom. It's been really nice.
No worries. Bye-bye.
Thank you. Bye. Bye-bye.
Bye.